Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Dhanuka Agri Tech, one of the better you can say agrochemical company. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Dhanuka Agritech, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a question that you can ask me on a daily basis. And if you can pay for $100, you can pay upfront for 10 months and get 1 year access. So that's 25% extra. For detailed market or company talk, you can directly email me and we can work things out. Now about the company, Dhanuka Agritech was established in 1985 and they manufacture agri inputs comprising of crop protection, chemicals and plant growth. It is a top brand in this space and they produce these crop protection products in abundance. Over 40 products with brand names in various domains for crop protection like herbicides, fungicides and pesticides. It is a prominent national brand in its space. If you look at the financials of the company, and this is the December quarter numbers, then sales went up by around 9%, but profits jumped by around 43% due to lower expenses, lower taxes, and a lot of operational efficiency that came through. It is a virtually debt free company. There's high institutional and promoter holding with 9% free float in it, which is a extremely big positive for the company. Return on equity is around 17% and margins is around 15%, which could improve going forward as we have seen that monsoons are much better. So going forward, I think things will get even better, and probably in the next 5 years, margins and ROEs would increase. If you look at the performance of the stock, then stock has done nothing over the last 4 years. It has done not appreciably that well. Numbers have remained robust, but the stock has not jumped that much as to ascertain that you can say that the stock has probably justified that what sort of numbers that has come through, and that is where valuation looks pretty decent. Although just recently stock has performed quite well and gone up, but on an overall 4 year basis, long term basis, stock has not done a lot. It has become one of the best agri plays at the moment. Profits and sales have both surged and valuations are reasonable. The stock has consolidated over months, as I've explained. But over the last month or so, or few days, it has gone up by 10-15%, so slightly stretched on a very short term basis. Otherwise, the stock looks very interesting. Strong operating numbers and healthy dividend payout is also big positives for the company. So why I believe it is a buy on decline? It is a market leader in agrochemical space and crop protection. There are other companies that are available in other segments of, you can say, agrochemicals, but in crop protection, there's Bayer Crop Sciences and there's this Dhanuka Agritech, and there are two, three other companies that are there, and that's just about it. So three or four companies which are doing extremely well in this space, and Dhanuka is one of them. A number of top brands are selling across India and doing extremely well. Uh, it will outperform as rural economy recovers, and yes, at this moment with the second wave of the pandemic, etc., the rural economy is not doing that greatly well. But hopefully once things normalize, and it is going on the anvil, and with the monsoon season still going on, I think September quarter would be very big for the company, and going forward also from FY23 onwards, things should stabilize, and so the recovery in this segment would take shape from FY23 onwards. So a good 3-4 year time frame with the stock would be a prudent strategy. Valuations are attractive, not quite 22 times. When I made the presentation, it was around 22 times. It has run up a bit. It's around 24-25 times earnings, but still it is not extremely expensive, and on average use it used to trade at 50-60 times, so it can easily double from these valuations. This time around, since it has gone up 15-20%, so I would say it is still, there is still scope for around 60% upside in the stock from current levels over the next year and a half. If you look at the technicals of the stock, there is strong support around the 850 900 levels. If you remember, just about a month back, it was trading around 650 700. It has broken that out. So right now at 900 rupees, the biggest support lies around 850. It may show some consolidation as it has run up a bit in the recent times, so may go to 980 at best and then consolidate. Good levels to buy would be below 900, closer to 870 levels, and then 850 levels would be very good to buy. I think a long term stop loss can be put at around 800, and the stock can be bought at these levels and then held for the next 3-4 years. Can consistently end up giving decent results. So what needs to be done? In my opinion, buy on major declines and keep track of numbers over a period of time. It will perform. Have a good 3-4 year view at least. If possible, have a 5 year view. It can still give around 20% CAGR, 20 to 22% CAGR from these levels, and perform really well and have less than 5% exposure into such stocks. So this was a video on Dhanuka Agri Tech. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.